All right, guys. So, welcome back to the channel. My name is Kenneth Dennis, and I'm so happy to be here with you guys today. We're going to get straight to it. So, what I want to talk to you guys about is how do you switch from compliance pricing to value based pricing and charging actually what you're worth? And what does that process look like? Okay. So what I'm gonna do, as always, I'm gonna head to my iPad. But guys, again, please make sure you like and subscribe to the video as it helps with the algorithm, gives me motivation to continue creating awesome content for you guys. And I would really appreciate that. Okay. So what we're gonna be speaking about within this video is we're gonna be speaking about compliance versus advisory pricing. Okay. This is what we're gonna be speaking about. So let's just go by line item by line item, right? So what exactly is tax compliance? Okay. So tax compliance is simply put, is you simply filing a tax return for a customer, whether the federal or at the state level, right? It's simply filing a return for your clients state and federal level. Okay. This is tax compliance. Okay. And when it comes to tax compliance pricing, your pricing can range from anywhere between 300 bucks all the way to sometimes I've seen $1,000 depending on the type of forms. We're talking 1120s, 1040s, whatever the case may be, right? But obviously, at this price point, you have to move an extreme amount of volume to really give yourself a chance to grow and scale your firm. Because at the end of the day, for you to have a firm that does 100,000 or a quarter million, you're going to have to be moving a lot of tax returns to do this. So let's dive deeper into why is tax compliance so cheaply priced? Okay. The reason why tax returns are so cheaply priced is because it's a commodity service. Okay. And when I say a commodity service, you might be thinking to yourself, well, what exactly is a commodity, or what does that look like, or all that type of good stuff, right? So I kind of want to explain to you what a commodity is. A commodity is something that is readily available. It's like if you think about agriculture, right? Food, corn, vegetables, this, that. Commodities are things that are very readily available, like water. Okay. So when things are at a surplus and are available, and this goes for the same thing for bookkeeping as well, right? When things are at a surplus and they're available, customers will make choices based on one thing: price. We have all gone to Target and we've seen the Clorox for this price, and we've gone to Walmart and we've seen it for that price, and we chose the other product because at the end of the day, bleach is readily available. We just need bleach. It's nothing special. At the end of the day, when it comes to tax compliance, and I hate to break the news to you, what we do is nothing special. All we're simply doing is filing a tax return. Okay. And when you're filing a tax return, this can be done by companies like TurboTax, H&R, Liberty. I'm gonna give some love to what is it? Jumping jack tax. A whole bunch of different franchising companies, right? They could be done, or it could be done by your mother, your mother-in-law, your sister, your friend. So what makes filing a tax return special? Nothing. That's why the price that you're able to charge is so low, because I can go down the street and somebody can undercut you, and I'm going to choose that person because at the end of the day, it's mandatory for 80% of Americans to file tax returns. So if something is a commodity and I have to do it, I'm looking at price. It's the decisions are based on price. So the reason you haven't been able to scale or grow your business, or you still work at a firm and you're doing tax returns on the side, or you're a one solopreneur and you're working with companies, but you're only making your money during tax season and you can't figure out anything else. This is the reason why. Now, how do we transition to advisory? Now, advisory services are services where you're consulting with your clients to make better financial decisions. It's the consultation with your client. Okay. And when you're consulting with your client, there's a relationship that's being built. It's a relationship business. Okay. And when there's a relationship that's being built, there's obviously something that's being done in return, right? And the service that we're offering is tax planning. And you might ask yourself, why tax planning? The reason being is because it's not a commodity-based service. It's a value-based service. Let me explain to you what a value-based service is. Okay. A value-based service is something where the price is connected to the value of what you're offering. Okay. The price is connected to the value of what you're offering. Okay. So, for instance, let's look this up real quick. So, for instance, let's look up. So, as you can see right here, for patients not covered by health insurance, the typical cost of a brain surgery ranges from anywhere between $50,000 to $150,000 or more. That's a lot of money. That's a ton of money. So if you had no insurance, right, and you've had some technical brain injury or whatever the case may be, they're charging you $50,000 to $100,000. Okay. Now, why do you think they're charging you $50,000 to $100,000 for that? Why? Just because? Because the price is connected to the value. What is the value? Your life. Let's look up what a heart surgery costs. Okay. Let's look at what a heart surgery costs. This is interesting, actually. I'm kind of liking this. So a heart surgery costs you, okay, here we go. How much does open, let's look up, how much is open heart surgery cost? Okay, so in California, it's $64,000. How much does open heart surgery cost in the US? Typically anywhere between $30,000 to over $200,000. Okay. it can range anywhere between $30,000 to $200,000. Okay. Depending on how severe your heart surgery or heart complications are, right? So again, we've gone from, let's just put it in the middle. $75,000 for a heart surgery. That's just us being nice. So the price is connected to the value. That's why they're able to charge so much, because the value is your life. Okay. Now let's look at value-based pricing for tax planning and how you're able to charge so much. Okay. So when you look at tax planning, okay, you have the price, right? We're going to do the exact same thing. And we're going to do the value. Okay. We're going to do the value. Perfect. Okay. What are the two things that are guaranteed in life? Death and taxes. Those are the two things that are going to forever be guaranteed in life. Death and taxes. Okay. Forever, 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 forever. Okay. What are the number one things people hate to pay? Taxes. So there's a high pain threshold of somebody wanting to pay taxes. They do not want to pay it. I want you guys to imagine this. Imagine you've built a business that does over $1 million a year. You've slaved for 20 plus years building that business. You slept in the warehouse for over 2 years because you couldn't afford an apartment, and you slept on a mattress every single day, and you woke up and you built this business every day for 2 to 3 years until 30 years later, it's $1 million business. This means everything to you. You put your everything into this. This is your Van Gogh. And now that you make this money, the IRS comes to you and says, hey, Joe, we're going to need a check for $300,000. You need to make that payable to the IRS. So I want you to sit down. I really want you, and I want to put this on full screen. I really want you to sit down and imagine you pulling out your checkbook, you looking at your Wells Fargo account, writing that check, getting ready to send it in or paying it online, then seeing that $300,000 deduct from your account. You don't think that's painful? Put painful in the comments if you think that's painful or not. That's pretty damn painful, right? Pretty damn painful. So, why are we able to charge so much for tax planning? Because the value is people get to keep their money. That's the value. And when it comes to the price, we could charge an absorbent amount of money to allow them to keep their money in their pocket. That's what we can do. And that can range for anywhere between I've seen deals to $30,000 per tax plan. Now you might be asking yourself, well, how is that possible? How can I charge them $5,000 or $30,000? Or there's just no way. I'm just used to charging $500. Let me tell you, the reason you're able to charge that is because there's something that's called percentage-based pricing. With percentage-based pricing was built and engineered to be a value-based pricing mechanism to capture value. So when you're going through the planning process and you're having your first phone call and you're extracting all the information from the client, and you're getting their data, you're going to eventually pull and have enough information where you can basically figure out what's going to be their estimated tax savings if they were to work with you. And if their estimated tax savings is $300,000, at minimum, when it comes to percentage-based pricing, we charge 10%. That means your fee is now $30,000 for that engagement. That, ladies and gentlemen, is how you basically transition from tax compliance to advisory pricing, because now your pricing is connected to the value in which you bring your clients. You've brought them value and you're being compensated the same way a brain surgeon is helping save a person's life and they're being compensated over $60,000, $75,000. If a person owes $300,000 to the IRS, they're going to be more than willing to pay you $30,000 for that. And that's just the first year's savings. If they continue to implement the same strategies for year 2, if nothing changes, or year 3 and nothing changes, right? And they keep the same strategy going on. Let's say their income doesn't change, because this just isn't is when you save somebody money, save somebody on taxes, not just a 1-year thing, it's an accumulated thing, because they can implement these strategies every year. You see what I'm saying? That's the beauty of it. Okay. So now we're talking about 30,000. So we're talking about a $30,000 engagement agreement, right? $30,000 engagement agreement is what these people have paid you. And if we're looking at over 3 years, that's going to be $900,000. Okay. Right? $900,000 that this company has saved working with you. $900,000. So I paid you $30,000, and over the next 3 years, or even doing a 10-year thing, I'm going to save this much in cash. That's the beauty of this. Okay, guys? So that's how you transition yourself from compliance to advisory pricing. This is how you can continuously scale and put yourself in a whole different tax bracket when you do stuff like this. Okay. All right. I hope that helps. Make sure you guys like and subscribe. And if you guys want more information on this, please make sure you guys type in TPG into the comments. Okay. Type TPG into the comments. Okay. And I'll have one of our people reach out to you and show you guys how to actually do this completely for free. And they'll show you exactly how to do percentage-based pricing. Okay. So make sure you guys type TPG in the comments. All right. Again, make sure you like and subscribe, and I will talk to you later. Thank you.